You know the story they tell us, right? Get the keys, the house, the white picket fence. That's the American dream. But let's be real for a second. For a whole lot of people, especially now, that dream just feels, I don't know, broken, like a fairy tale from a totally different era.
So you have to ask, right? Is that dream of actually owning your own home, of building some wealth for your family, is it just dead? Because for millions of people, when you look at the numbers, it just doesn't work. Not anymore. But don't you worry your little head about it. Because just when it seems completely impossible, the government, well, they've got a fix. Word is a new program is about to drop. And get this, it's not designed to make houses cheaper. Oh no, it's designed to change what it even means to buy one. So let's take a look at what they're calling the new American dream. The sales pitch is really simple. You get a lower monthly payment. Sounds good, right? But as you're about to see, that lower payment comes at an absolutely staggering price.
Okay, so here's the ugly reality we're all living in. The average house is knocking on the door of $500,000. Interest rates are stuck at a painful 7%. So to even qualify for a normal loan, you need to be making around $120,000 a year. I mean, who does that? Most people can't even get close. And so this is their brilliant solution. Introducing the 50-year mortgage. Yeah, you heard me right, 50 years. That's 600 payments. The whole idea is to stretch your debt over half a century just to make that monthly bill look a tiny bit smaller, a little more affordable.
All right, let's run the numbers on this forever loan. And I'm warning you right now, this is where it gets really, really ugly. And you can see the appeal right away, can't you? It's seductive. For the same house, a normal 30-year loan is about $3,300 a month. But with this new 50-year loan, it drops to $2,800. That's $500 a month back in your pocket. That feels like a lifeline. That feels like you can finally make it work.
But here's the number they don't want you to see. Here is the true cost. Over the life of that 50-year loan, you will pay $1.3 million in interest. That's just the interest. You are paying nearly 3 times the price of the house just for the privilege of staying there. This isn't a deal, it's financial insanity.
And this is the part you really have to understand. This changes everything. You aren't building wealth anymore. You aren't buying an asset that grows in value. You are buying a subscription to a building. That's it. It's a very, very expensive monthly service. And this whole subscription model leads directly to the next part of the trap: zero equity. This is the mechanism that makes sure that once you're in, you can pretty much never leave. Just look at this. This is your payment 10 years into the loan. A full decade of sending in checks every single month. And where did that money go? 95% of it went straight into the bank's pocket as interest. Only a tiny, pathetic 5% actually went to paying down your loan. You've built nothing. Now think about what that means in the real world. Most people move, right? Life happens. But if you try to sell this house after 10 years, you find out you still owe the bank almost the entire $500,000 you started with. You have no equity. You can't sell it for a profit to move somewhere else. You are stuck. You've basically become a renter who also has to pay to fix the broken toilet. Oh, but the trap doesn't just end with you. Because who pays off a 50-year loan in their working lifetime? Nobody. And believe me, this isn't some brand new crazy idea. This is a model for generational debt that's already being used in other parts of the world. You can look at Japan. They've had 100-year mortgages. They're literally designed to be passed from parent to child. The UK is exploring similar intergenerational loans. The plan is brutally simple. If one person can't carry the debt for their whole life, just make their kids carry it for the rest of theirs. So just visualize this for a second. When you're gone, your son doesn't inherit a paid-off house. He doesn't get an asset that sets him up for life. No, he doesn't get the house. He gets the bill. He inherits your monthly payment. Your debt becomes his legacy. Which brings us to the final, really stark choice that this whole thing creates. That old dream of paying off a house and living debt-free, that seems to be over. The new dream is just about finding a payment you can afford this month, even if it means you're in debt forever.
So I'm asking you, really, imagine that contract is sitting on the table in front of you. It's the only way you can get your kids into a house with a backyard in a decent school district. It's the only path you can see. Do you sign it? Would you?
Because in the end, it all just boils down to this one single question. And it's a question that might define an entire generation.
When these are your only options, is it better to just rent forever or to own your debt?